in machines, these errors are minimal. The transaction cost is reduced through algos because when you do a manual trading, your manpower costs, your number of people required are very high. But algos do thousands of transactions through one machine. So ultimately, the execution cost of each transaction is very low. You can do a multiple checks of different market conditions. Your machine will consider all different multiple market conditions if it is a part of their code and then give you the desired result. As a human being, I can see 4 variables, 5 variables, मेरे को 5 information पता होगी, 6 information पता होगी, मैं trade कर दूंगा. But machine will consider almost everything available in the market in form of information before executing the trade. So we have to be very, very much thankful to the coders. If they write a correct code, my trade is executed after having all the information or exhaustive list of information. It reduces risk of manual errors. As I told you, as a human being, I can do a lot of errors while placing a deal. I can press a sell instead of buy. I can write a wrong price. But a machine will not do it because it doesn't have that human tendency of making an error. It's a machine working on a software with a defined code and set of instructions. As I told you, every algorithm is being back tested. तो मार्केट के अंदर जब भी कोई एल्गो ट्रेडिंग प्लेटफॉर्म आता है और जब भी कोई एल्गोरिथम आता है, वो इतनी बार टेस्ट हो चुका होता है कि उसके अंदर जो प्रोबेबिलिटी ऑफ गेटिंग द आउटपुट, डिजायर्ड आउटपुट इज वेरी हाई. इट इज जस्ट लाइक अ मेडिसिन कि मार्केट में लॉन्च करने से पहले इट इज बीन टेस्टेड मल्टीपल टाइम्स एंड देन इट इज गिवन टू अ पेशेंट. नाउ वन ऑफ द इम्पॉर्टेंट फैक्टर जो हर ट्रेडर, हर इन्वेस्टर को इम्पैक्ट करता है, वो है इमोशंस. व्हेन वी सी मार्केट, व्हेन वी सी द शेयर्स, हमें लगता है कि ये शेयर्स खरीद लो. वी गेट इमोशनल टू कपल ऑफ कंपनीज, वी गेट इमोशनल टू लॉट ऑफ मोमेंटम. Machines doesn't have emotions. So whatever trade they do, they are actually not based on emotions or psychological factor, actually impacting the trade in a more professional manner. But everything is not good about algo trading. Risks are also there. If something is good, that doesn't mean that everything is good. What are the risks for algo trading platforms or algo trading, algorithmic trading? One is it's a mechanical process. It's a machine, very much prone towards failure. There can be a thing that machine have a breakdown, nothing happens. आपके ट्रेड सारे रुक गए. एंड इसमें इतना पैसा इन्वॉल्व होता है that there can be serious losses. Another thing is high volatility. These kind of trades actually are involving so much of money that it can create a volatile market. And any small change in market condition, which is part of their algorithm, can lead to a steep fall or steep rise. And we are actually not considering maybe other factors beyond those codes. So we have to be very, very, very careful while seeing the algos, while seeing those funds which are working on algos, that what codes are being considered, what are the factors being considered. And yes, as I told you, any small change can lead to a huge steep or huge fall. Incorrect algorithm. As I told you, the whole concept is based on your set of instructions. अगर वो set of instructions ही आपने मशीन को गलत दे दिए तो वो परफॉर्म गलत ही करेगा. हमें ये देखना है कि जो इंस्ट्रक्शंस गए हैं वो करेक्ट गए हैं, उसमें कुछ भी मैनिपुलेशन नहीं है. क्योंकि उसमें फिर बड़े बड़े लॉसेस हो सकते हैं, मार्केट टूट सकती है, आपके शेयर प्राइस ज़मीन पे आ सकते हैं. सो वी हैव टू बी वेरी वेरी प्रिसाइज in terms of the instructions given are correct or not. Lack of transparency. हमने स्टार्टिंग में डेफिनेशन में एक वर्ड बोला था, ब्लैक बॉक्स ट्रेडिंग. वाई इट इज अ ब्लैक बॉक्स ट्रेडिंग? बिकॉज वी डोंट नो हाउ द प्रोसेसिंग इज बीन डन इन द सिस्टम. सो अ ट्रेडर कैन नॉट मॉनिटर that what trades are executed and what are the difference in expectation and results. Many algorithms uses basic functions to execute the trade, which will again result to unfavorable outcome. So I would say that this kind of trading is not very much transparent. आपको पता है नॉर्मल ट्रेडिंग में आप किससे शेयर खरीद रहे हैं, एंड आपको ये पता है कि क्या किस लेवल पे एग्जीक्यूशन है, क्या आपकी एक्सपेक्टेशंस है, क्या रिजल्ट्स है. बट इस केस के अंदर जो सिस्टम में अंदर प्रोसेस पड़ रहा है वो आपको नहीं पता. वन ऑफ द रिस्क विच आई फील इज देयर इन दिस ट्रेडिंग इज imbalance in the market. Today, as I told you, in India, more than 50% trade is done on algos. My regular retail traders are actually very less in the market, and it is creating an imbalance. It is creating a fragmentation because these algo trades already have a lot of funds. They are very big, and retail traders are not much big. So a key point over here is that it creates a fragmentation, and sometimes it also lead that everybody is running towards what algo is deciding. So one of the reason which make it risky is imbalance in the market. Although I would say that government is taking lot of steps to make it more transparent, to create an awareness in people about these trades, about algo trading platforms, and also a check that how they are impacting the market. One of the concepts which is added with algorithmic trading is high frequency trading, which is HFT. If I would say HFT is just like a health supplement to a player जो उसकी performance बढ़ाता है. It's just like a steroids. For algorithm trading, high frequency trading is basically a health supplement because it increases its speed many folds. Thousands of trades are going on these trading platform in milliseconds. Execution, buy, sell, everything is happening. And with these sophisticated servers, with these fast servers, it is actually increasing the speed, and execution time is very, very less. So I would say that price discovery and discrepancies in HFT is very low because the execution is done fast. The search is done fast and execution is done fast. So you are having profit, or I would say any kind of change in price being executed at a super speed. Now somebody will ask that or think momentum or any kind of strategy can be used for algorithmic trading or not. So I would say that there are so many strategies which can be used to make set of instructions. We will discuss only few of them. So if I talk about few strategies which are commonly used in market, one of them is momentum based strategy or trend based strategy. This strategy is basically about what is there in a market on a momentum on a particular share, and you write an instruction to the machine that follow this momentum and execute this trade. For example, you can say that if a share is trading above 200 days of average and its 30 days moving average is higher than that, you buy the share. And if it is trading below that average, you sell the share. So you are actually earning out of that trend. You are buying it high and selling it at a small steep or small fall and earning out of it. This strategy is commonly used strategy because it is totally based on trend. The another strategy which I can think of is arbitrage algorithmic strategy, which is very common. What is arbitrage? So arbitrage is basically to take the benefit of the pricing of the commodity in two different markets. So we create a set of instructions or algorithms to find different prices among two different markets and buy or sell order to take the advantage. So you are buying the share and you are selling the same share at the same point of time in two different markets. I would take an example of a BSE or NSE. You buy a share at BSE or you sell the same share in NSE. It is actually giving you a benefit of some amount due to the difference in price. And through algorithm trading, through machines, you are actually doing it on a very fast pace. That is why when you give an instruction to your machine, you are actually adding two markets. And for this kind of trade, you would require speed, you will require accuracy, you will require the volume, so to earn profit out of it. One of the strategy which I would think about is mean reversion strategy. It's about a concept which says that any change in price, stock high or low, is temporary, and ultimately it will come back to its average price over the time. तो ये कहता है अगर शेयर प्राइस ऊपर जा रहा है या नीचे जा रहा है, अल्टीमेटली वो अपने एवरेज प्राइस पे वापस आ जाएगा. And you give a set of instruction to your machine that whenever there is a distortion in price from the average price, ऊपर या नीचे, you will execute the trade. So this is about mean revision strategy. Now we will cover a very, very common strategy which is known as market making strategy. This strategy says that you will offer buy and sell of the same instrument in the market with a limit of order, and whenever you will get the desired price, you will execute the trade. So supposedly a market maker, जो कि trader है, he goes to the market and writes a buy order as well as a sell order at a particular price. So whenever there is a buy, he will execute it, and whenever there is a sell, he will execute the sell order from his own inventory. So this is the whole concept about algorithmic trading, that there are multiple strategies which are involved, and we have to make it possible that before investing, we know about that platform and we learn about it. There are few points before we are going to the market to be remembered about these trades. One, anticipate the unexpected. Any result can come because these are machines. Human knowledge, that it is about pure human knowledge. There can be over trading and there can be overconfidence. So I would say that whenever you are going to the market, read about this concept, understand about it, and then invest. Thank you.